Oil prices rose for a second week in a row and settled at their highest in nearly 2 months on Friday, as positive U.S. economic growth and signs of Chinese stimulus boosted demand expectations, while Middle East supply concerns added support. WTI crude oil climbed to $78, the highest close since November. The benchmark experienced weekly gains exceeding 6%, marking its most significant weekly increase since the week ending October 13. Following the onset of the Israel-Hamas conflict in Gaza. Factors contributing to this uptrend included economic stimulus from China, stronger than expected fourth-quarter GDP growth in the U.S., cooling U.S. inflation data, ongoing geopolitical risks, and a larger-than-expected 9.2 million barrel drop in U.S. commercial crude stocks for the last week. A naval operation by Houthi forces targeting an oil tanker in the Gulf of Aden, resulting in a fire, heightened concerns about supply disruptions. Additionally, a larger-than-expected drawdown in U.S. crude stockpiles earlier in the week, particularly around the WTI delivery point at Cushing in Oklahoma and across the Midwest, could lead to a squeeze on nearby futures prices. Further supporting prices was the potential for a fuel supply disruption following a Ukrainian drone attack on an export-oriented oil refinery in southern Russia. On the demand side, the U.S., the world's largest oil consumer, recorded faster-than-expected economic growth in the fourth quarter, as revealed by Thursday's data. Positive sentiment was also fueled by China's recent measures to boost growth. However, traders speculated that the U.S. central bank is more likely to initiate rate cuts in May rather than March, which weighed on crude futures. In addition, Baker Hughes reported that U.S. energy firms added 2 oil rigs this week, bringing the total to 499, which somewhat tempered gains. Despite this, money managers increased their net long U.S. crude futures and options positions in the week ending January 23, according to the U.S. Commodity Futures Trading Commission. Meanwhile, EIA expects that average annual crude oil prices in 2024 and 2025 will hover near the previous year's average due to the anticipation that global supply and demand for petroleum liquids will maintain a relatively balanced state over the next 2 years. The anticipated average for Brent crude oil is projected to be $82 per barrel this year and $79 in 2025, compared with the average of $82 last year. It is also anticipated that the price of WTI will be slightly lower, but generally follow a similar trajectory. In the first quarter, crude oil prices are expected to experience a moderate increase, driven by OPEC Plus production cuts, leading to global stock draws of 810,000 barrels per day. Consequently, with these stock draws, the forecast indicates that the price of Brent will rise to $85 in March 2024. The expectation is that crude oil prices will gradually decrease after April, with minor stock builds as global production surpasses consumption. Stocks are forecasted to increase by 110,000 barrels per day this year and by 280,000 barrels per day in 2025. Given the current market conditions, the short-term outlook for oil markets appears bullish. As you can see, the WTI Great Oil market has had a highly positive week, successfully surpassing the crucial $75 threshold. This $75 level had previously served as significant resistance, but now it appears that we are poised for further upward movement, possibly extending to the 50-week moving average. Should we manage to break above the 50-week moving average, I am inclined to believe that WTI will sustain its upward trajectory, potentially reaching as high as $90 in the long run. On the downside, as long as we remain above $72, it seems that buyers are largely in control, suggesting a continued upward trend. Thank you for watching. Please don't forget to support the channel if you enjoyed the video. See you in the next one.